Welcome to Premium Cashflow Real Estate Investing Podcast with Sakar Cowley. During this program, you will hear guest experts sharing their experiences, best practices, and market insights. We discuss investing in multifamily apartment complexes and how a busy professional can passively invest hassle-free in various opportunities. Your host, Sakar Cowley, owns millions of dollars of assets and has done thousands of value-add projects over 20 years now. So listen in for insights. Here's your host, Sakar Cowley.
Welcome, friends. Here at Premium Cashflow Podcast, I want to welcome everyone. Here we talk about great advice and interview guest experts. We talk with experts who can share their knowledge, research-oriented articles, share the demographics, and give us sage advice about how investing in real estate can be great. Today I have Ben Frederick. He's the lead realtor and a broker at Ben Frederick Realty. He's done generations of real estate. He's like, if I'm not mistaken, Ben, you're like the third generation into this now.
Third generation, yes.
Absolutely. So without further ado, Ben, I want to welcome you to the show. And I think the audience are going to love your sage advice and the experience that you bring to the table. So I really appreciate you taking time today to speak to me and share your advice and your experience around all of this. If you don't mind, Ben, let's get started. If you could share, just a bit more about yourself. I know I just gave a slimmer of this of your introduction, but if you may.
Car, thank you for having me as a guest on your show. You and I have worked together for a couple of years. I really come to admire you and respect you for the way you manage your properties, the way you take on projects.
Thank you.
I feel like in your real estate skill, I mean, you've come, into the real estate business, and you've learned a lot and you've done really, really well with your projects. So I really appreciate
Thank you.
Our relationship and enjoy working with you. It's a pleasure to be here.
And just to share with your audience, I've known Ben for almost 3-4 years now. Over the years, of course, I have seen him in the community and being active, whether it's landlord boards or different community boards or housing boards. I've seen it all. And finally, actually 2 years ago, I had the opportunity to work with him and buy apartment buildings from Ben. And I think they've been just great. So without further ado, Ben, if you may share with our audience, like, what is investment real estate? And specifically, if you may address, like, how great is investing in Baltimore? Like, just to give you a context, like, we live in the suburbs of Virginia and Washington, D.C., for example, and we know how expensive those markets are. So compared to just 50 miles down the Beltway, we are at Baltimore and the surrounding neighborhoods. So if you may elaborate or tell us about how great Baltimore is and what benefit it brings to us.
Well, if you're a football fan, you gotta love the Baltimore Ravens, and yes. The Baltimore Ravens are just kind of like that hardcore, blue collar, let's get down, let's get dirty, let's dig it out. And the Ravens play the best when they are the underdogs. And that's really endemic of Baltimore. If the Ravens go into a game and they're the favored team, a lot of times they don't do so well. But when they're the underdogs, boy, they really dig it out and make it happen. And that's really, a very good analogy for Baltimore as a whole. Because we have Washington, D.C. is 20 miles to the south of us. And
Absolutely.
That's the nation's capital. So it's the nation's capital. They've just got high growth and high value, high income people. And so it's just it's the capital of our nation. What can you say?
Right.
So Baltimore kind of takes a sidestep and is a step down from that. So that's kind of what we're competing with. When we talk about competing for real estate and real estate capital. At the other end of the spectrum, New York is just, New York is less than 200 miles to the north of it. So I can jump in my car and I can be in downtown Manhattan in less than 3 hours. We get a lot of people coming in from both New York and also from Washington, D.C., and they're attracted to Baltimore because of its quaint neighborhoods. And really, there's value in Baltimore. Whereas New York and Washington, D.C., they attract capital from all over the world. And it's hard to compete with capital from all over the world. But when you can get into a world-class city like Baltimore and not have to compete with international capital, it means you can make a reasonable rate of return on your investment.
And just to continue your point further, Ben, as you said, I think there are very few cities which are thriving like Baltimore, where someone can purchase a investment asset, whether it's apartments, large-scale apartments, let's say houses, townhouses, and still make a cash flow. That's the fact that I really love about Baltimore, is that you have a thriving town around these big, gigantic metropolitan cities like DC, Virginia, Northern Virginia and things. And you can get into like extremely safer neighborhoods in that 100,000 price point. And if we shift to like apartments, for example, you could be in like $500,000 to $1 million. And you're owning like about, let's say, perhaps 10 units, 12 units, things like that, at a cap rate of anywhere between 6 to 8, and still cash flow very healthily. And one of the facts I also love is these are all vintage brick buildings, very solid construction. They are not going anywhere. And just the whole benefits in general that it brings, I just love that fact. And personally, when I saw these aspects, I said, you know what, I'm going to ignore the news media and go right in and expand. And at this point, I think we are well over 200 houses, townhouses, apartments and things of that nature. I just, couldn't be happier. Like coming back to the apartments, Ben, like at my company as Premium Cashflow Capital or premiumcashflow.com, we mostly talk about, like how we can provide value to busy professionals and help them with knowledge, experience, and have them the opportunity that they can come in, invest the capital and partner with us or, lead syndicators and, just grow their income slowly but surely. And real estate in general is a great vehicle that I think beats most of the asset classes in general. So if you may elaborate, Ben, like sort of the salient points or benefits that real estate brings in and provides, like a stability to someone's investment portfolio.
I'm a real estate broker. I've been a real estate broker for 38 years now. And so
Absolutely.
my specialty is apartment buildings and investment property. So I have a lot of people come to me and they say, I want to invest in real estate. I sit down, I meet with them, I talk about their goals and objectives. And when somebody says, I want to invest in real estate, I'm like, real estate is not an investment. And the reaction I get is like, well, what do you mean? Of course real estate's an investment. Yeah, of course we can invest in real estate. I'm like, no. Real estate, when you buy an apartment building, you're not investing in real estate. You are getting into the rental property business.
Business, absolutely.
You are in the rental property business. So you're running an operating business. If I go out and buy stock in Apple or Amazon, I'm not running their businesses. I'm just writing a check and I'm sitting back and watching them do all the work.
Right.
Real estate doesn't work that way. I write a check and then I start working.
That's very true, very true. And I think, as you said, Ben, it's knowing what are the elements involved and, how you like, if there are issues, how you can address them. I think one of the facts I really love is being resourceful is great. You got to surround with great people and have great professional crew. And to take the story further, I think if you want to maybe elaborate on, like the different things like, cash flow, tax advantages, appreciation, and equity buildup, just to give an overall picture of how someone makes that investment in real estate, not just cash flow, but the other benefit that it brings in,
Yeah. So on the investor issue, so it helps to have, if you can't run the properties yourself, you don't want to hire a third-party property manager. If you just want to invest in real estate, you need to get with a partner who has operating experience. You want somebody who knows how to run this stuff, knows how to deal with the day-to-day issues. Very, very important. If you're going to get into real estate and you don't want to work yourself, partner up with somebody who's willing to do experience and the capability to do that.
Right.
As for, real estate's a beautiful thing. There really are 4 ways you make money in real estate. The first way is cash flow. So cash flow is pretty straightforward. You collect your rents, you pay your utility bills, your property taxes, you pay your mortgage, and you get some profit at the end of the month, and that's your cash flow. So cash flow is pretty straightforward. That's what most people think about. The second way you make money in real estate is through appreciation. So hopefully the value of the property is going up over time. And the great thing about real estate is leverage. So let's say you buy $1 million building and you put 20% down and you have an $800,000 mortgage. So you've got $200,000 invested in this property. If that property goes up in value just 5%, value has gone from $1 million to $1,050,000. You might say, great, I made an extra 5% on my investment. That's not the whole story, because
it gets better.
I only have $200,000 invested in this project. So a $50,000 increase in value against the $200,000 investment, that's not a 5% return on investment. That's 25% increase in my equity, increase in my wealth position. So that's really one of the great benefits of owning real estate. Now, the third way is equity buildup just through paying off the mortgage. Even if the value of the property doesn't go up, over time, I'm going to be paying off my loan, and my mortgage balance is going to be going down, and that means my equity is going up as my mortgage gets paid down. So even if the value of the property doesn't change at all, I'm increasing my wealth, I'm increasing my equity. And who is it that's really paying the mortgage? It's the tenants. The tenants are paying the mortgage. So the tenants are increasing my equity every month. You know, in a typical scenarios that the numbers that I run, you can see, 3, 5, 7% increase in your equity every year simply by paying down that mortgage. So that's the third way you make money in real estate. And then the fourth way is through tax savings. So real estate is a tax advantaged investment opportunity. You'll pay less taxes because you own real estate than if you invested in other things.
Correct.
Because real estate has certain tax advantages associated with owning real estate. So we've seen people lower their marginal tax rate by 15, 20, 25% as a result of owning real estate versus if they just left the money in the bank or if they invested in stocks and bonds.
Correct.
That tax advantage will add a point, 2 points, 3 points, 4 points to your overall rate of return is the tax advantages of owning investment real estate. So you combine those four different things: cash flow, appreciation, equity buildup, and tax savings, and you've got a heck of a good investment.
Right. I love it. And the fact you said about leverage also, Ben, is that there are very few asset classes where you can say that, okay, I'm going to put down 15, 20, 25, 30% and own a bigger pie. And obviously tenants are paying the mortgage. So just the whole beauty of it is just unbelievable. And when you reach a certain scale and you can be, completely sort of financially free as I am, it just opens a whole door of opportunities where you can be looking at much, much bigger apartments and things like that, which basically we're just now starting to look at, 80 units, 100 units and attract the capital because, we managed our properties all day long. From day one, we've been managing, we know how to deal with issues and things like that. Another thing I want to maybe draw attention for the audience to is that people don't realize that when we invest our savings in a bank, you're barely getting 1%. But on the back end, the banks are looking for stellar investment opportunities where they can park their money. And all the investments and all the investment real estate is run by all these banks investing all kinds of capital in these projects. And guess where they are coming? They are coming to me, to you, to look for these stable opportunities where they can go and invest the money. So when I go to all these different meetings with VPs and presidents of the bank, I continuously get asked that, okay, do we have any projects where their bank can invest with us? And we're talking millions and millions of dollars. So just the idea that, okay, I need money to get started or I need a lot of money to get started. I think I want to lay that claim that you don't need a lot of money. although you can be broke, you need some money to do it. Yeah. But if your investment is very sound and it gives the benefits, as you said, that I think there's plenty of money that can be found, and you can be financially on your way to financially free, I should say. Also, Ben, I know you are a CCIM designated broker. So I want to draw attention to, what is CCIM, what is involved, and more importantly, why people should know that partnering with a CCIM broker, what are those salient advantages when it comes to all the investment real estate?
Yes. So CCIM stands for Certified Commercial Investment Member. It's sure. Kind of a weird acronym, but it's what it is. Right? So it's conferred by the National Association of Realtors. And the CCIM is a designation for people that specialize in commercial and investment real estate. And we say commercial real estate, it's really income producing properties is what we focus on. So we go through very intensive, there's a series of 5 graduate level real estate classes that I take, dealing everything from cash flow analysis, discounted cash flow, internal rate of return calculations. We study the tax implications of owning real estate. That has everything to do with, opportunity zones is a new thing, expensing of commercial real estate, the expense deductions we can get, depreciation, 1031 tax deferred exchanges. We study all of these things.
Sure.
We also study a site analysis. How do you determine if a property is in a good location? What makes a good location?
Sure.
We study demographics and trends in the industry and understand how that impacts housing. And then there's also the people skills, negotiation skills, understanding people and how you relate the physical assets to people and their needs. So it's 5 graduate level classes. We have to do 2 demonstration reports. This is like a 40 or 50 page term paper where we take on a property, a transaction that we have done, and demonstrate to the graders how we've used the techniques that we learned in CCIM to help people achieve their goals. Mm-hmm. Finally, and then there's experience credits and a final exam. The comprehensive final exam is the last step towards getting your CCIM. So in the universe of real estate agents, there's 1 million real estate agents in the country. In the United States, there's 1 million real estate agents. There are about 7,500 CCIMs. So CCIMs represent 3/4% of the universe of real estate agents.
Wow.
So these are people that have really, committed to learning, to gaining the skills and the knowledge to really understand the impact and the implications of, helping people get into good real estate investments.
Right. Absolutely. Thank you, Ben. I think I want to draw our audience attention to something that you said about demographics, job growth, and how it relates to housing and things like that. Sure. So one of the things, or the most fundamental things that folks do during apartment investing is study the trends where the submarkets are heading, like where the industries are moving. So there is a huge job growth, population is obviously increasing and stuff. And apartments in general tend to be the least common denominator in housing. Rents between 700 to 1,000 nowadays are, depending on your submarkets, are like the bare basics of what you need to be there. And when you're talking large level apartments, small rent bump, which we basically did at our apartments, is that the rents that were $750, we took them up to $785, $825. So that's very small bump in rents multiplied by the number of units, just increases how much your income is. And at the base of it is your NOI, is your net operating income. And as we all know, the investments are all analyzed and valued on NOI. So once this whole game of increasing the NOI works, it's unbelievable that you can have a property that's worth, let's say maybe 600,000, and you bump it up, you're suddenly into a 725K or 750,000 valuation. And it's just knowing, as you said, knowing what the dynamics are, whether there's a university at the corner or there's a hospital at the corner that's going to provide you that housing and always increase the occupancy of it.
That gets back to one of the great things about Baltimore. So if you invest like in the South, you go into Florida, Texas, markets like that, those markets, man, they go up and they go down.
Right.
So in Florida, you have this big building boom, and then it reaches a peak, and then it crashes.
Right.
Texas, we've seen the same thing. Colorado, we've seen the same thing over and over again, go through these horrible, extensive real estate recessions, actually depressions. In Baltimore, because we're so close to Washington, D.C., a lot of Baltimore's economy is related to the federal government. We have the Social Security Administration is located right here in Baltimore. The Healthcare Finance Administration is located right here in Baltimore. NSA, the National Security Agency, is just south of Baltimore.
Right.
Fort Meade and Aberdeen Proving Ground. So those two bases, when the government reduced the bases, the military bases throughout the country, Fort Meade and Aberdeen, they actually grew in size. So they closed other bases and moved them to this area because we're so close to Washington, D.C.
Absolutely.
So when the economy goes down, the government doesn't shrink.
Absolutely.
We don't lose those jobs.
Right.
And when you think about the federal government, there's also, you think about the lawyers, the lobbyists, the defense contractors that are all located in this area to be close to the federal government. Again, they're really insulated from the wild swings of the economy. The other major factor in our economy is Johns Hopkins. So Johns Hopkins, they run Johns Hopkins University, one of the top-rated universities in the country. They run Johns Hopkins Hospital, one of the top-rated, consistently one of the top 3 hospitals in the country. They run the Space Science Institute. The Hubble spacecraft is operated right here from a facility right here in Baltimore.
Right.
Applied Physics Laboratory. Hopkins is into so many things.
So many things. Yep.
I'm told that 1 job in 10 in the state of Maryland is somehow related to Johns Hopkins. So
absolutely.
I rent to Johns Hopkins students, so I'm one of those 1 in 10.
Right. And another fact also in that, Ben, is that all these jobs are high-paying jobs. So what I always like to say is that one high-paying job can create anywhere between 2 to 3 other indirect jobs, whether that could be, your pizza restaurant down the street, a thriving Starbucks, or any food joint and things like that.
The thing of it is, it's like the university and the medical system and these sort of things. It's not like, if you're in Detroit and you have cars, your economy is going to go up and down based on the car industry. Texas, your economy is based on the oil industry, and the oil industry is going up and then it goes down.
Right.
But government and institutions like Hopkins, they don't go down. They just keep steaming along. So that provides a very stable base for our economy. That makes for a consistently strong rental market and consistent
absolutely
for housing.
Right. And another fact also in that, Ben, is that, we have equally thriving private industry as well. Like Baltimore is quickly becoming security, and, we have Under Armour, all these different companies that are absolutely there. So it's a great combination of, having, a federal government presence, all the stable jobs, and of course the thriving private sector as well. Yep. And just wanted to, kind of go through as, experienced as you are, Ben, and you bring in decades of experience. You've seen literally thousands of investors and things like that. I wanted to ask you, what are the key habits or routines that someone can adopt that leads to their success? What have you seen out there in terms of, people who have succeeded? What were their qualities, and what were those basics that attributed to their success?
I think tenacity, stick-to-itness. You have to be flexible. You have to be able to change. You have to be able to go with the flow. The laws are constantly changing. The market is constantly changing. So you just have to be able to adapt and solve problems.
Absolutely. I think you have it there. Learning and being continuously flexible and adaptable becomes your key to success. I love it.
Yeah. One of my clients and I, we say we're turtles. You know, we just keep plodding along, you know, just like we get an idea, you know, something comes up, we just like, let's work through it, just take it step by step, work through the problem.
I like that. I like that. I remember that. The turtle methodology.
Turtle wins the race, yes.
Yeah. Bit by bit, sure, but sure, you know. Sounds good. And also, Ben, like, you know, what could be the sort of the stumbling blocks or major failure points that someone should watch out in terms of whether it's their mindset, their attitude, and things like that? What would you, in comparison to real estate, like, what do you think are like sort of those stumbling blocks for somebody, you know?
I think it's really important to approach the business with a positive attitude, you know, just to be able to come in and solve problems. There are a lot of problems, there are a lot of roadblocks, there are a lot of speed bumps along the way, and you just have to be able to look through those, you know, just kind of ride through those little speed bumps, figure it out, and move along. Choosing a business style, having a business plan, and coming up with a model, and the model has to work for me. So, you know, coming up with a tenant profile that I want to serve, you know, a segment of the market that I want to serve and get really good at serving that market segment. Right. is really important, is really as a key to success. When people come in and they're buying something here, they're buying something there, they're kind of going all over the place. They're in low income, they're in high income, and it's just like, it becomes too much. It becomes very difficult to, you know, to stay with it and really understand their market. So I think
I agree with you.
Sticking with a market profile is very important.
I agree with you. I think where we are also, Ben, is I can perfectly relate to that, is we concentrated on excellent neighborhoods right around our Baltimore Beltway. They tend to be, you know, less crime prone and extremely like sound where people are working. One of the great things we noticed was renovate the properties to A class. Like all our properties have, you know, like new kitchens with granite, finished basements. We have, you know, completely new bathrooms and things like that. So we go through all this process, and at the end of the day, it's really never a question that whether the house meets the tenant's requirement. It's really more about, does the tenant meet our criteria that we want to work with and rent to the person? And once we took those basics, as you said, like, you know, knowing your criteria, getting your renovations done correctly, we just exploded like really bananas, and literally went from, you know, like humble, you know, some houses to like, I mean, at this point, we're like over 200 at this point. And predominantly Section 8, we love Section 8 because with all this stringent requirement it brings, and also the compliance towards the tenant, we just love that fact. And I think you're right about that knowing, you know, your criteria, sticking to it, and, you know, sort of multiplying over it, we just love it. One of the pet peeves that I always, you know, go after is that how real estate and personal development are extremely related. And this is a very topic of passion for me, is that once I discovered that, you know, your customer service, how you interact with people, whether it's tenants, lenders, brokers, contractors, it's a very small world. And the way you interact, the way you know, bring your positive mindset, and you bring in that quality that you are basically in here for a win-win, not really a win-lose cause. So I love that. I'd love to, you know, kind of see and echo your thoughts about how real estate and personal development are, you know, correlated.
Personal integrity is extremely important. Baltimore is a small town. Everybody knows everybody. It's like, I'm not going to do one deal with you. I'm going to run into you again and again and again. So it's really important to operate with a high degree of integrity. It's important to me to operate that way. Moreover, operating with the idea of service. So I want to provide a service to you, Sakhar. I want to be helpful to you. I want to be in my interactions with tenants and with residents. I mean, as a landlord, I'm in the business of providing housing. I'm a housing provider. That's my business. So I want to make sure that I'm providing properties that are well maintained, that are safe. I want to be responsive. I don't want to do more than I'm supposed to do, but I want to do what I'm supposed to do and do it with a high degree of quality, responsiveness. I want to treat people with respect. And so these are all, you know, qualities that I think are important for success in the industry. And the mindset, to have the mindset of being able to think positively, be willing to solve problems, see problems as a challenge, and approach the world with integrity and honor and service, being of service to my community.
I couldn't agree more, Ben, there. And one of the huge things I also discovered, like when we started to grow, and obviously due to our leverage, not that we were over leveraged, but you have investments coming in from the banks and things like that. One of the things I realized was that steward mentality that you said, not only that you are providing service to your tenants, but you are providing a stable asset class and a guarantee through your assets to your bank investments that have done. So, I mean, many years ago, we started to do is like, we'll contribute automatically, like over $1,000 to $2,000 of extra payments or, monthly extra payment towards principal. So as we said in the beginning that, how your amortization schedule runs, your principal balance goes down and things like that. We wanted to show to the bankers that, hey, not only this investment real estate is sound, it can outperform, and I can show you. So what the net effect of all these things was that when they would sit at their quarterly meetings or biannual meetings, they would review the portfolios and they would go crazy. They were like, oh wow, really? I mean, we were at this and now we are at like such a low balance level.
Yes.
Like I would get continuously calls where, Sakhar, you must be doing something right. Here is something we have. Do you think you can purchase this? And I'm like, whoa, wait a second. I was like, oh my God. So it was just something, as you said, that having a great integrity towards everyone and servicing everybody with that honesty, sincerity just takes you, so much further. I couldn't agree.
Yeah.
I know, Ben, you've done decades of experience here. If on a lighter note, I want to ask if you could share, you go through so many projects and you've seen so much. If you could share anything interesting along your listings or how things turned out, I'd love to hear that.
It's just really, Sakhar, it's about being a part of the community, using my creativity to make the world a better place for my having been here. That's really what it's all about. I just try to, do the best I can each day, and somehow it seems to have worked out okay for me.
I know. I love that analogy, Ben. Yeah. And if you may, Ben, I know you're short on time. How can people get in touch with you?
Sure. My website is very simply benfrederick.com, benfrederick.com. And jump on my website, see what we got going on. On there, I do post regularly videos on how to be a better investor, how to manage properties, right. How to appeal your property tax assessments, all kinds of things like that.
Right. Thank you, Ben. I appreciate the advice. People can also log on to premiumcashflow.com and learn more about different opportunities that we have. And we regularly host such podcasts where we'll bring in guests and share the advice and kind of try to educate the audience about how great these investment classes can be. So without further ado, Ben, I appreciate it. Thank you for your time today, and best of luck. I'm sure we'll be, speaking soon.
Very welcome.
Be well.
Be well.
Thank you, Ben.
You're welcome. Bye-bye.
Thanks for listening to Premium Cashflow Real Estate Investing Podcast. Please join us at premiumcashflow.com to sign up for weekly updates, research articles, and more. We will see you again for another great interview with an expert guest.